Hey everybody, Simon Dixon here, and yesterday I did my very first Twitter video on a Twitter live stream, and I was really surprised. I really enjoyed it, even though I was just rocking up as I am today with my unsteady hand, breaking my shoulder trying to figure out how to use this thing. But I think it's a medium I'm going to use more because it was really popular. I think we had I did a couple of videos yesterday, and combined there was over, I think, approximately 8,000 views, which is a lot more than I would get in the first day on YouTube. So this seems to be where the community seems to be hanging out. So I'm going to do a few more of these. Would love your feedback and just discussing this, because the topic of today is actually a really important topic, and it's discussing the financial crisis that is due to come. And also what governments are doing right now and how that relates to the crypto sphere. So I'm going to discuss that, but just before I get into the topic, we'll give it time for a few more people to join us live. A couple of updates, I guess. Yesterday I discussed the whole Facebook scenario and why I think that is bullish for Bitcoin. If you missed that, just check out my Twitter feed, where I'm streaming this live right now, and you can see that video. It's a quick video, and the idea is to get these things pretty quick and not go on too long, but give you a little snippet or snapshot on what's happening and what I'm thinking. Trying to get into some new habits here. I also talked about the video that I gave 7 years ago on Facebook's move into banking. And I think it was after I came back from a conference and met Mark Zuckerberg's sister at a conference. I think it was his sister, Randy Zuckerberg, if I remember correctly. It was quite a long time ago. And found out about their vision with Facebook credits. And now they're going for a second attempt at that. Let me change hands. Excuse the shaking. I'll do that a few times. So carrying on from that theme, I'd like to share with you a video that I gave 7 years ago as well, which I found in the archives. And in order to find that video, it's a short TEDx talk. It was my very first TEDx talk. And if you search in YouTube, Simon Dixon changing the rules of banking, you should find a video on Simon Dixon's YouTube channel, which I'm going to start using again because it's got about 6,000 subscribers, and I haven't used it for years. I'm probably going to bring that alive again today. So head over there, and if you see that, you'll see a TEDx talk that I gave, and I discussed the rules of banking that are going to lead to the next financial crisis. Still looking back at that video, I had a quick review, and the things that I said are true as ever. I was a little bit thinner, so I was in better shape, but it also inspired me to, I've just ordered my gym here, and I'm going to attempt publicly declaring right now to get back into a better shape as I was back there 7 years ago. Anyway, so let's jump into the topic. So the next financial crisis, it's around the corner. It's hard to say exactly when, but the reason is exactly because of the reasons that I discussed in that video 7 years ago. I think when I recorded that 7 years ago, I was 6 years into giving talks on banking reforms and challenges. I first left investment banking in 2006 to start this mission. And that was pre-Bitcoin, pre-fintech, and then wrote the book Bank to the Future. But check out that video and it will tell you why the financial crisis is coming. What is interesting is in that video, I gave a real way of visualizing what £2 trillion of debt looks like. Now, what's interesting today is that £2 trillion, which I thought was really extreme at the time, you could hear it in my voice, has now become approximately $240 trillion of global debt. And it went wild out of control since publishing that video, as QE got worse and worse and worse, and governments decided to solve the problem that caused the financial crisis, which is too much debt, with another heroin fix of additional debt. And they took us to an experiment in a world that we've never seen before, which is, the vast amount of debt that can never be repaid. But it will be, I'll tell you how I think it is actually going to go. So, yesterday we talked about Facebook's cryptocurrency and how that's going to lead to adoption for Bitcoin. Today I'm going to talk about what governments are going to do in the next financial crisis, and what impact that's going to have on you. So what have we learned over the last decade? Well, we've learned that governments will figure out any kind of financial innovation in order to rehypothecate debt, because all money is created as debt. I don't want to go into that. I gave that in the TEDx talk, so check that out if you want to understand a bit more about what that means. But what we've learned since then is that governments all around the world are willing to use mass financial engineering in order to prop up the system. Why? Because banks are too big to fail. And for those of you that think banks should be allowed to fail, well, that's actually going to be extremely destructive and harmful for the economy. And I don't want everyone to lose their money, because there's not enough deposit insurance to cover everyone's deposits at these banks, because money is debt. And so therefore it would be very harmful and very destructive for everyone to lose their deposits, which would be the natural thing to do when a bank goes bust. So what are they going to do? Well, there's zero appetite for a bailout. I think if we went for another bailout of the financial system during the next financial crisis, then there would be riots on the street. It would really get nasty. We saw nothing last time compared to what we'd see this time. People are really pissed off. There's been a lot of education about what would happen and what has happened. They are not likely to bail in. We saw that in Cyprus, very unpopular decision. Although laws all around the world have been changed in order to make bailing in more easy, it's an education that people, when you deposit your money at a bank, you're not the legal owner of that money. But a bail-in is essentially where they use your deposit in order to save the bank. So if we're not having bail-ins and we're not having bailouts, what else is there? Well, there's interest rates. So before this QE debt experiment, the governments used to use interest rates in order to try and control how much money the banks create. And so what they used to do is they used to push down interest rates, and that would make the cost of borrowing cheaper, and therefore more people would take on debt. When more people take on debt, it creates more money, and therefore when it creates more money, it rejigs the economy and gives it another shot of debt heroin into the economy. But now interest rates are at record low, and some of them are moving into negative interest rates to discourage savers even further and encourage everybody to just take on debt and get rid of all their savings and discourage savings. And then what they used to do is, once the economy recovers, they would put the interest rates up, which would effectively send the people that borrowed the money, that were on the verge of collapse and on the verge of only just being able to afford their mortgage, like the subprime mortgage people, that sends them bankrupt, and then it leads to mass defaults and a deflationary effect on the economy. So that is no longer an option. We've lost that tool. Well, they could get the central bank to take on more debt, quantitative easing, which is exactly what they've been doing. But I think that they've found a new tool and a new way. And I think this is exactly what the government are going to do during the next financial crisis, which is inevitable, predictable, and guaranteed, as I talked about in that video 7 years ago on TEDx. And what they're going to do is they're essentially going to allow the banks to go bust this time and figure out how you don't lose your deposit in the process of allowing the banks to go bust. And I think that they've been preparing for that for years now, and it's all because of Bitcoin. So let me explain that to you. So governments all around the world, central banks all around the world, have been playing with the concept of launching their own cryptocurrency or digital currency. Most people in Bitcoin just think it's a ridiculous thing. And it is a ridiculous thing when comparing it to Bitcoin, which is why the case for Bitcoin is so interesting. Because a centralized version just means it will be censored. It will lead to some of the effects that I'll discuss at the end of this video. And I'll tell you some of the reasons why it's going to lead to adoption of Bitcoin as well. Essentially, it's a ridiculous concept because it's a worse version of Bitcoin with all the problems that come with it. But, however, the government are going to need a new money supply. So let's say that there's a student loan crisis, which is just around the corner, or a credit crisis, which is just around the corner, or that people took on, I still know that those crazy loans are being issued whereby the government is putting up 5% of the deposit, the person has no money, they're losing their job, more and more people are going freelance, and therefore jobs are on the low, and then people can't afford those mortgages again. So it could just be the same process of subprime mortgage loans again, but on maybe just in a niche little country like rather than the US, it might be something like one of these smaller countries in the EU or something can catalyze the whole system. That's how fragile it is. But what I'm forecasting that they're going to do is they're going to allow the bank to go bust. There will be a black swan event centered around causing a catalyst domino effect in the debt crisis at the banking system. And that bank is going to create a massive catalyst again. And this time the governments are going to let the banks go bust. But what they're going to do is they're going to launch their own cryptocurrency. It probably won't be a cryptocurrency. It would just be a centralized database, probably not built upon a public blockchain. It would probably be some kind of hyperledger thing, or something that they come up with that like Facebook has just recently rolled out or going to be rolling out. It might be more decentralized. That would be really interesting, but I doubt it. Governments want, if anything, they want to get rid of cash, so they're not going to make it where you can own your own money and spend your own money. They want to continue the war on money laundering. So therefore they want to make sure everyone declares who they are and they identify themselves. And they also want to tax collect because they are completely almost insolvent. They can't meet their liabilities in terms of healthcare and social welfare and pension and everything they've got coming up. And so therefore they're not going to create a cryptocurrency. They're going to create some kind of centralized database that supports their goal of tackling money laundering, tax evasion, and in general having more control over the system and making sure that they can control how you spend it, who you spend it with, and automate tax collection as well. They're certainly going to do that. So it will no longer be that you declare your tax. They're going to tell you how much tax you owe. And then they're going to automate the tax collection, and it'll be your decision to try and fight to get the money back under this type of system. Anyway, what they're going to do is they'll say, so let's say you bank with HSBC and you have $3,000 in your bank account. The deposit insurance probably doesn't have enough money to cover a bankruptcy of HSBC, even though they claim they do. So what they would do is they would create a digital currency, or their version of a digital currency, let's just call it that. And the central bank will create it this time. Rather than the private bank might come up with their own solution, very similar to some kind of initial exchange offering where they issue, let's call it an initial bank offering, where they issue the token to everybody that lost their deposit, and that deposit is backed by their debt. And so therefore that you have this digital token that represents your balance. And if the banks are smart, that's what they'll do in order to try and retain some kind of control. Because the alternative is that the central bank is going to create it and they let the bank go bust. So let's say that you let HSBC go bust. The central bank will come along and take the assets and liabilities on the balance sheet of HSBC because they're matched, because every debt is matched by an asset, which they call debt. And they'll match them up and they'll say, right, we're going to issue this amount of GBP coin or USD coin, which is either going to be called Fed coin or something like that, or Bank of England coin or whatever it might be, whichever country is affected first. And you're going to be able to download an app. And when you download that app, if you provide your KYC data, your proof of address, identity, biometrics, iris, everything to prove that you are who they are on their databases that they've been collecting over the years, maybe connect your Facebook or your Facebook, whatever it is, and your social accounts. And then you're going to be able to prove that you are who you say you are, and they'll match it with the $3,000 balance in Bank of England coin or Fed coin or whatever it will be. And then you will have a digital currency on your wallet. The bank will be allowed to go bust. There will be no bail-in, there will be no bailout, no liability to taxpayers. but the central bank has essentially competed with the retail bank. The retail bank is now no longer has the ability to create money, and as more and more banks have more exponential effect, and the domino effect continues, they will increase that money supply based upon how much debt is at those banks. And then essentially the central bank will be competing with the retail bank now, and they'll have API keys and they'll get fintech companies to create solutions on top of it, because the Bank of England doesn't want to deal with all the customer service. They'll just allow fintech companies that have been building solutions to integrate at the central bank level and provide financial services using their stable coin or Fed coin or whatever you want to call it, whatever they'll call it, GBP backed coin. The issue is that now what we've done is, with at least banks creating money, although it had a horrible effect of being backed by debt, which has an incredible risk to the financial system that's going to implode it at some point, it means that depositors don't necessarily lose their money, but the money that was created at a bank backed by debt is now replaced with money at a central bank, which is not backed by debt, which is then backed by the balance sheet of the retail bank. And we'll end up with less and less retail banks, more of them going bust, and all money being centrally controlled at the central bank. And now, because the government are no longer one step removed through the private banking sector over money creation, essentially a central bank becomes what people thought, and they were teaching in economics, that a bank does, which is kind of an intermediary between borrow and lend via fintech companies backed by a stable coin or a Fed coin or whatever you want to call it. And so that's what I think is coming next. Now, every single central bank has a blockchain innovation department. They've all been experimenting with how they're going to create these cryptocurrencies or how they're going to create these blockchain-based solutions. And I think it's a hedge against the upcoming financial crisis. And they're figuring out how to automate tax collection into that, how to automate control. Now, the issue is that while we won't have this debt Ponzi scheme that we currently have, we'll have mass control and mass centralization at the central banks over money creation. And then it can compete with the private currencies like Bitcoin, which allows you to spend your own money, own your own money, and has a monetary policy that rewards the saver rather than a deflationary monetary policy like these digital currencies will have. Because the government is so close to it, they'll be able to issue it at whim, and depending, countries will then compete as they do today, but rather than using interest rates in order to stimulate the banking sector, they're just going to be using how much money they create directly via this digital currency. And the governments that get reckless with creating too much of the currency will end up in a hyperinflation situation. The ones that don't create enough might end up in a deflationary situation, and you'll have a mass, currency war around the world trying to figure out who's going to be the dominant currency, and there'll be lots of different models, and it will compete, and then it will compete with private currencies like Bitcoin. But the currencies that the governments create will be priced against Bitcoin, they'll be tradable against Bitcoin, and people will start to realize that their savings are better off in some cases, depending on what happens with Bitcoin, and it will create, I believe, mass adoption for an apolitical, neutral digital currency, Bitcoin. And the reason it will do that is because people are going to start to experience worse and worse user experience with their money. When the automated tax collection happens and they take too much tax, and you have to go through this massive, administration process in order to try and get your money back, people are going to look for alternatives. When you can't spend your money because you went to the wrong country and you went to visit Venezuela or Syria, or some other country that the government doesn't want you to visit, and you swipe your passport, then at the same time they switch off your money at the same time as switching off your passport, and therefore you can't spend money, and that experience will be so horrific for some people that they'll start to look at alternatives. And then we're going to get, I believe, this mass adoption of people realizing that they need to learn how to control their personal security, get hardware wallets, and understand that the self-sovereignty and freedom that comes from separating politics and money for the first time in human history. So, big topic, way more than I thought I'd actually discuss, but that's what I'm preparing for. That's what I think will be coming next. What does that mean for the everyday person? Well, the everyday person, I believe this isn't financial advice. You have to do your own research, but I think people should at least be preparing for a hedge. Because I do believe that there's going to be one of the biggest wealth redistributions that we've seen in centuries, of people that are getting into the cryptocurrency sphere in the correct way versus those who are not. And so really the only message that I have is educate yourself, hedge yourself. Even if you don't believe that any of this is going to happen, and I'm a baffling idiot, conspiracy theory with a tinfoil hat, not financial advice, but I would suggest that people take at least 10% of their disposable money that they can afford to lose and start exploring the hedges. Start exploring, how they would protect themselves if the financial system did go through some of these trends that I'm forecasting that I might be completely wrong at. And do that with money that you can afford to lose. Maybe it's a question of trying to find someone that will allow you to pay some of your money in Bitcoin or whatever it might be. But get involved in the alternative. You don't really want to be doing that at the time when everybody has to, but unfortunately that's exactly what most of the world are going to do. But this is why I'm bullish on things like Facebook coin, because although it won't be anything like Bitcoin, it will bring billions of people into the cryptocurrency sphere, and then they can actually start to learn about cryptocurrency. They can start to understand the differences, and this is a great place to check out the other video that I gave yesterday on Facebook coin. So let me know what you think of this video. Please add the comments if you like this. Please do help me spread the word, share the word, retweet it, like it, help us get more of this message out so that more people understand and know what to do, or can at least start thinking about whether that Simon Dixon is a baffling idiot with a tinfoil hat that's talking crap. So at that section, I'm over and out. Let me know what you'd like to see in future videos. I'll try and do more of these. I'll try and keep them shorter, but I tend to over speak, and I'll try and figure out a way of getting a steady camera. I've just bought a device that does that, and unfortunately it doesn't connect with Twitter Live. And I really don't want to do Facebook Live because Twitter Live seems to be where the community are. So I'm going to end the broadcast, and thank you very much for your time.